All novel technologies and newly emerging industries are moving faster than regulation. It's a cat and mouse game, and that's the way it's always been. The blockchain industry is the most vibrant and recent example of this. In the midst of the ICO craze, it became clear that cryptocurrencies are being offered and sold as securities with absolutely no protection for investors. As a result, the SEC became the institutional authority compelled to take action. But what exactly is the SEC? And what issues are they hoping to address? And what does any of this mean for the growth of the cryptocurrency markets? Stay tuned for more. The Securities and Exchange Commission, or the SEC, is the federal regulatory authority of the securities markets. It was established in 1934 to regulate the stock markets during the Great Depression, where investors had little to no confidence in the markets. As you can imagine, the SEC had a lot of work to do to bring back investor confidence, which they did successfully. Their mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. And while many in the crypto space may be appalled by attempts of regulation, it's been stated that over 10% of funds raised by ICOs have been either lost or stolen. It's because of this that ICOs have become synonymous with excessive risk and unrealistic valuations. The SEC's primary area of focus is in dealing with the offerings and sales of securities, regulating exchanges on which the securities are traded, and ensuring that companies are not disclosing misleading information about their performance or future prospects. They also ensure that investors are treated justly by dealers, brokers, and exchanges. In this context, I'm sure many of you will agree that regulation is not always such a bad thing. We don't want to live in a world where digital assets are synonymous with scams and foul play. Now let's bring our attention to the term cryptocurrency. Cryptocurrency is quite a generic term for digital assets. These digital assets can be grouped into three distinct categories: utility tokens, currencies, and securities. The SEC has no jurisdiction over transactions in currencies or commodities. But companies issuing securities must register with the SEC and disclose a description of the company's properties and business purpose, a description of the security being offered, information about the company's management, and financial statements about the company certified by independent accountants. So what does this mean for the current cryptocurrency market? Well, in March of 2018, the SEC issued a statement saying that any digital asset that meets the definition of a security must register as such. This put a huge halt on the ICO market, and it's likely that new projects will seek an alternative route to raising funds in order to avoid regulation and having the SEC constantly monitoring their company. We'll have to see what happens. Additionally, the SEC is set to make a final decision regarding several Bitcoin ETFs this month, the most notable being the CBOE. If approved, the ETFs will bring big institutional investors into the market, which will lead to a market more robust than ever. If rejected, however, the market will likely suffer a big blow. However, it's important to point out that the SEC can still postpone a decision on the CBOE ETF until February, and that's quite a while from now. I believe they're eventually going to approve the ETF, but only after they give the market a good shake. It's sort of a power play. Alright, that's going to do it for this video. I really appreciate you watching. Please make sure to like the video if you enjoyed it, and subscribe if you want to see more. Talk to you next time.